strong performance of GT Capital Holdings' core operating companies boosted earnings in the first quarter. The T family's investment arm reported a core net income of 8.7 billion pesos in the first quarter, marking a year-on-year growth of 27%. Consolidated net income jumped by 29% year-on-year to 9.14 billion pesos. On the technical chart, GT Capital Holdings Incorporated rallying streak right now after hitting a new 18-month low of 465 pesos last month. However, says Ron Acoba of Trading Edge, the stock's rebound may face resistance around the 560 peso mark, which previously acted as a support level. So for GT Cap to break out of its medium-term downtrend, it needs to establish a new base and convincingly move above 560 per share. With us now for more is George Uy-Tioco Jr., the Chief Financial Officer and Treasurer of GT Capital Holdings Incorporated. Good to have you here, George. Thank you so much for joining us.
Good morning. Thanks for having me. It's a pleasure.
Yes, that happened on a day that the Moody's had downgraded America's credit ratings, and the impact we're seeing in Asia for the first time. What sort of an impact, though, might it have on sovereigns that hold treasuries and also corporates who hold dollar-denominated debt?
You think about it. The typical reaction of markets when there's a downgrade in ratings is typically to have an increase in the cost of borrowing. So that typically results in a lowering of the debt itself, the value of the debt itself. Whether that's going to have a full impact on something like the credit of the U.S. or not, I think still remains to be seen. Maybe it may mean slightly higher rates, but again, it remains to be seen. Primarily because the U.S. is still a major force in the world in terms of its dollar, the strength of the dollar in trade and international commerce. So we'll see. We'll see what happens, and I guess, like they say, just don't change this channel.
Yeah, but for corporates though holding dollar-denominated debt, would that be a concern when you think about those listed here in the Philippine Stock Exchange?
I can't speak for the others. We ourselves don't hold dollar-denominated debt, but I think where we would be more concerned about if we had any dollar holdings is on the FX exchange, on the exchange rate. Typically, movements in interest rates may have an impact on exchange rates, and that's something that we would watch out for very carefully. But like I said, we ourselves do not hold any dollar debt, nor do we have any positions in U.S. dollar. So to us, it's very, very minimal, practically no impact to us.
But you have them in pesos and some of them in Japanese yen.
Yeah. Right now, pretty much, I'd say 90% of our debt is in pesos. There's a portion that is in Japanese yen, and that was taken out to purchase a Japanese investment that we made a few years ago into Automotive Corporation. So that one is fully hedged. So in that sense, there's little to no impact to us. If there's any impact, it's going to be on the FX and how it impacts the cost of importing vehicles for Toyota, which are typically denominated in U.S. dollars.
Right. So what would that mean then if we're at, your forecast for the Philippine peso at 55 perhaps? What are you forecasting and how are you hedging against it?
We ourselves rely on bank forecasts and our banks that to determine where the FX is going to be. I think latest indications, before everything that happened at the start of this year, indications were the exchange rate was going to be in the 58, 59 range. I think a number of banks have adjusted their forecasts for the FX rate, so we expect that that's going to be probably somewhere in the 56, 57 range. For us, where the cost of vehicles that come in are denominated in U.S. dollars, a stronger peso actually is favorable to us. But we also don't want it to be too strong, in which case, then it can go easily the other way the following year.
Let's talk about your CapEx. You've earlier announced 26.9 billion. That's an earlier figure, and that is excluding the 11.5 billion that you're setting aside for new pursuits. How are you going to raise that CapEx, and what are you going to do with it?
Well, right now, we're in a very fortunate position where our key businesses, namely Metrobank, Toyota, and Metro Pacific, are actually generating a lot of profits and generating a lot of cash for us. And as a result, in the last 2 years, 3 years, we've actually enjoyed a very strong net positive cash flow coming into our businesses. In the last 5 years, what we've done with that is mostly pay down debt, especially as we saw a rising interest rate environment. Just the cost of refinancing the debt didn't make any sense. So what we are now in a position where we can look to invest in new businesses and new industries, and that's something that we're looking at and looking forward to. But it's not easy to find an attractive sector or an attractive company that actually will move the needle for a conglomerate as large as ours.
What are the metrics, though? I mean, if you're going to be sector specific, what would make sense in the order of what is attractive in your description?
When we look at investments, we're looking for something that matches our minimum internal hurdle rates, and that would be something that can give us returns in like the mid double-digit returns, mid-teens, preferably higher teens if we can. Something that is relatively resilient to economic shocks, and something that, or sectors that are sectors that are needed by people in general. We're primarily a consumption economy, so we're looking for sectors that most people here in the Philippines look for, and at the same time are relatively fragmented, so that it's not, you don't have to compete against a major entrenched player to be able to make a dent in that particular industry.
So could we cross out highly regulated?
We try to manage our exposure to highly regulated industries. Right now, we have an investment in Metro Pacific Investments Corporation, and that is in a number of highly regulated industries. But directly, I think we're comfortable where we are right now. We try to avoid anything that is highly regulated at this point in time.
All right, so you haven't got a decision yet, but it's consumption-based.
Yeah, not a decision yet. If in the last few years, a sector that has really increased in terms of visibility is healthcare. The COVID pandemic basically has raised people's awareness about the need for healthcare, and from our perspective, we feel that there's still an opportunity to play a role there. It's just that we have to find the right way to enter that particular sector. The other sector that we know is in great demand and is really energy, because we have a growing economy. First quarter, we grew at 5.4%. Last year, we were at 5.8%. When you have an economy that's growing as fast as ours is, the demands for energy is going to be very, very high. So that's another sector we think could be an interesting area to invest in. But like I said, it's always a question of finding the right opportunity, the right platform, the right partner to enter into that sector with, that will give us the kind of returns that we're looking for.
In the meantime, your auto and your banking business are doing all right. They're performing well, but then they're also exposed to the global policy uncertainties because of the Trump tariffs.
Sure.
Autos, for one, is also facing a lot of competition from Chinese car makers, BYD, trumping the Japanese automakers, not just Toyota, but for the rest of the Japanese rivals. How are you taking this on with BYD partnering with Ayala, and also the demand for consumers' need for environment-friendly vehicles are rising?
Well, we actually welcome the entry of a player like BYD because it's a sign that the market as a whole is growing and growing very fast, and there's going to be an increasing demand for a wide variety of products. Toyota itself in the first quarter of this year, we grew by about 12%, compared year on year, which is faster than the industry as a whole. If you look at the Campi figures, the industry grew about 6.6% in the first quarter. If you add informal estimates of what BYD numbers were, that's probably closer to 10. But the fact that we're still able to grow at the same pace or faster than the industry, I think is a good sign as far as Toyota is concerned. It shows that we have the right product mix that people are looking for, and we cater to a broader range of consumers across the different sectors. As far as electric vehicles are concerned, definitely, I think we see the rise of electrified vehicles. But in a country like the Philippines, we believe that hybrids are probably going to take the center stage compared to pure electric vehicles. And the numbers show that. This year alone, the growth in electric vehicle sales is like something in the neighborhood of like 120%, somewhere in that neighborhood. In our particular case, we're up about 7% of our total vehicle sales are hybrid vehicles. But in a market like the Philippines, where you don't have the charging infrastructure, which is very costly to make, we believe that hybrid vehicles are probably going to lead the way insofar as electrification is concerned.
We got about 2 minutes to go. I know property is looking really interesting. Question is, are you land banking? And if so, for which purpose? Is it going to be office, residential, retail, mall, or hotels?
Well, right
Given
now,
the condo oversupply that we're seeing in NCR.
Yeah, right now we actually have about 700 plus hectares of land in our inventory that we have in our land bank. Most of it is located in Cavite with our development in River Park. And that is an area of focus that our property businesses have decided to pivot to and shift to look at horizontal developments, standalone individual home units, as opposed to vertical, which had been traditionally our strength. We think that that's where the market is going. We can see it from the sales that we've recognized. Definitely, that's going to be a sector of focus. Hotels, not really, not necessarily. We do have a very strong hotel with the Grand Hyatt in BGC. But if we're going to set up another, it's a question of location and finding the right place and the right market to be able to set up another.
All right. Well, thank you so much. Wide-ranging conversation there in 10 minutes, George. I appreciate it.
Thank you so much.
George Uy-Tioco of GT Capital Holdings there.